we're going to do a catch-up for your F6, okay? So, for those who just joined, we're going to revise what we learned, okay? Then, those who are existing first term, I would say this is a good revision, okay? So, it's time that you revise back on those rules we learned earlier, okay? Now, what we're going to cover will be on this set, and we will look through from chapter 1 and all the way to employment, okay? Now, because when the results come out, second term start, we are already doing investment income, so that's where rental comes in, okay? Now, dividend interest is a very small area, so I'm not covering, okay? Now, the first issue we're gonna see is about working out resident status, okay? Now, you see, when it comes to tax, determine resident status is something very critical, because this status affects your tax treatment, right? Now, the more obvious one is like if you look at individual, okay? Example, if you look at individual. Now, what difference do you see if an individual is a resident and if individual is a non-resident? Okay. Now, things you learn so far. Resident, they will get tax relief, right? Okay. Now, of course, just to say tax relief is too simple, but you get what I'm trying to say. Okay. So you get a deduction at total income level, agreed? Now, the deductions like personal deduction will give you 9,000. Your EPF, you get deductions, you get relief. And if you're a non-resident, you will have no relief. Now, what other difference do you see? Now, as a resident, you pay tax at lower rate because your tax rate is scaled from 0 to 26. Okay, so that itself is an advantage. You pay less tax. Whereas a non-resident, your tax rate is flat 26. So regardless how much you're getting, you just pay 26%. Now, another example that you know so far is resident will get tax rebate, whereas non-resident will not get rebate. So, example of rebate, when is rebate given? Example. When you have, okay, when you have chargeable income below 35,000, 对吗？错了。Yes, not more than 35,000. Where you say below means it's 34,999. Okay, so it's not more than, not exceeding 35. Okay. Now, of course, other than that, we also have things like, for example, exemption. Now, we have exemption for resident. We also have exemptions which are meant for non-resident. Both also got, but it's different. No? Now, give me an example exemption that resident will get. Example. Remember royalty. Okay. Now, royalty, we cover quite a few exemptions, right? Your royalty exemption, your para 32. Okay. The exemption for royalty for the 10,000, 12,000, 20,000, depending on what royalty is that. Okay, that you get exemption for royalty. Now, you also get exemption because you're a resident, foreign income remitted, correct? Not? Foreign income remitted into Malaysia, you get exemption for those income. Okay. Now, I'm not saying that non-resident got no exemption. They also get exemption, but they have different exemption. Now, remember any exemption that non-resident is getting? 记得吗？No idea. 60 days rule, remember? So we have this para 21, 60 days rule, which is for employment. Okay. Now all that we will see okay, as and when we go through, I'll revise back again. Now, so there's an example to show you that because resident status has a lot of impact to your tax treatment. That's why it's very important you need to determine whether a person is resident or not resident. Now, so for individual, how do you determine resident status? You follow what? Section 7. Okay? So if you recall resident status for individual, we follow section 7. Now, section 7, we're going to look at provision of 7.1. Alright? Provision of 7.1, where we will count number of days that an individual is in the country. Correct enough? Now, but when we start counting the number of days, how do you determine what is a day? What does the law say? You got to do a quantitative test by counting number of days that you're in Malaysia. So the question is, how do you determine what is called a day? Do I need to stay for 24 hours to call a day? Don't need, right? Now what does the law tell us? Part of a day that you're in Malaysia is deemed as one full day you're in Malaysia. Okay? Now, so I'll go through again the 4 main rules that you got to know, which is on 7.1a, b, c, d. Okay? Now, so I'll start with 7.1a. Now, 1a is the easiest rule. So what's the condition do we need? What's the key thing about 1a? How many days? And at 82. Okay? So you need to have at least 182 days in Malaysia. Alright, now the 182 days you can have it in any manner you like. That means you want to have one stretch, 182 also can. You want to split them into many parts, you combine got 182 also can. Okay, now so we are looking at in a year, in a basis year, from January 1st until 31st December, you count. If you have 182 days, you become resident. Okay, now so that is 7.1a. And when you count the day, you just remember part of the day is already called 1 day. Follow? Now, so I'm not going to elaborate more on 1a. Okay, the more difficult one, in fact the most difficult one, is 1b. Now what is 7.1b? Now 7.1b says that if you are not having 182 days in that year, now when you don't have 182 days, you won't use A already, right? Let's say you have 100 days, you can't use A. Then what do you need? You need to borrow. Okay? So the whole idea of 7.1b is you borrow. Alright? So if you are in Malaysia for less than 182 days, okay, but you're gonna borrow, alright, but that period is linked to or by another period of 182 consecutive days. Now, so you need to borrow from your neighbor. Okay, you gotta borrow from your neighbor. Understand? Now, so the way it works is quite simple. Now, let's say this is the year that I want to determine the status, 2012. Alright? Now, so for 2012, now how many days that I'm in the country? Okay, let's say I'm in the country for 90 days. Now, if the period that you stay in the country is towards the end of the year, okay, then which part is closer to you? Because you need to borrow from your neighbor. So which part that is closer to you? The neighbor is 2013 or 2011? Which of course is 2013 because you're staying towards the end of the year, right? So it's easier for us to borrow from 2013, correct enough? Now when you want to borrow from 2013, you must borrow how many days? You borrow 182 consecutive days. That's what you need to borrow, understand? Huh? But when you borrow, you remember, you borrow from your neighbor. The neighbor must have 182. Do you count yourself? You don't count yourself. So that's why if I tell you, for example, that your neighbor, that means in 2013, you're also in the country, and let's say the period that you're in the country is, for example, 94 days. Now that is not enough, because you cannot count your own 90. You only count the one that your neighbor is having. You follow not? Now, so if I tell you your neighbor is 194, now that would help you, because you don't have 182, but because your neighbor has 182, now then in this case we say 2012 is linked to 2013 because you've borrowed from 2013. So that's called linked to. Now you can borrow from 2013. You can also borrow from 2011, right? So when you borrow from the one in the front, then we call it as link by. Understand? Huh? So link to is borrow from 2013. Link by is borrow from 2011. Follow? Huh? Okay. Now so 12 is linked to 13. And how many days you have in 13? With 194 consecutive days. Now we need 182 only. So in that case, you will see that 2012 you become a resident. Alright, you see that? Okay. Now so that's how 7(1)B works. Now but for us to borrow from your neighbor, the requirement is you must stick with your neighbor. Okay, you all must be sticking together. So that's why you see that the 90 and the 194, they are joined together. Then only you can borrow. Now if let's say they are not joined together, if they have a gap, then you cannot link anymore. So if you can't link, you can't borrow. So you can't use 7(1)B. You see, but we know that there are situations you have no choice, but you got to leave the country. So the government see some exception. So the government practice this thing called permitted temporary absence. Okay. Now what do you mean by permitted temporary absence again? Now again, this permitted temporary absence is only applicable in 7(1)B and not any other section. Follow? Okay. Now the whole idea of permitted temporary absence is what? You're not in Malaysia, but assume that you are in Malaysia. Alright? So that is temporary absence. Now, so if you have temporary absence, then the good news for us is you can use that to form the link. Okay, let's say now we have 2012 again. Now let's say I'm in the country like that, in the middle of the year. Alright? Now this time, I'm telling you that in 2011, I'm also in the country in the middle of the year. Now, 2011, I'm in the country for 120 days. Now 2012, I'm in the country for 160 days. Now both here by itself, you will not be a resident by virtue of 1A. Agree? Because you don't have 182. Now when you don't have 182, then what you need here is you need to have these 2 years borrow from each other. But if you are borrow from each other, then the requirement is they must be joining together like what you see on top. But unfortunately right now they are not. They are hanging in the middle. Okay? So you notice that they are not here in the end of the year, beginning of the year. So they are not joined together. So if you just not join together, you will never be able to use 7(1)(b). But exception to this is when you tell me the reason why you are not in the country is because of temporary absence. Now let's say I tell you over here that you are not in the country from this date to this date because of temporary absence. Now if you have a temporary absence, you just assume that you're in the country and you count the days as well. So when you start counting the days, now let's say I'm just putting down some days over here. Now I have 35 days and I have 40 days. Okay, I have 35 days and I have 40 days. Okay, now so based on the 35 and 40 that you assume that you're in the country, now we look at 2011. So we just imagine that this period that is open is now closed, that you're in the country. So if you're in the country, then you imagine that now it's like the 120 together with the 35 is also stick with the 40 and the 160. So but when you borrow, you need to borrow 182 days, right? Now do you have 182 days? How do you count? You always count from the cutoff point. So if you want to use 2012 to borrow from 2012, then you must start counting from here all the way to the front. How many days do you have? 200. How many days do you need? 182. So in that case, 2011, you become resident because of 7(1)(b). Okay? Now then the other side is, if we look at 2012 right now, now I also need to use 7(1)(b) to determine my resident status. So I also need to borrow from my neighbor. Now in this case, I'll borrow from 2011, right? Now when I borrow from 2011, I must see that two of them are connected, which they are connected by way of temporary absence. But when you look for the period that they connect, you want to count 182. How do you count 182? See, we are borrowing from 2011. That means you must start counting from the end of the year all the way to the front. And when you borrow from end all the way to the front, how many days do you have? 155. Now, do you have a link? Do you have enough days? No. So that's the problem that we are having. So for 2012, 7(1)(b), you fail, because the period link does not have at least 182 consecutive days. Okay, does not have at least 182 consecutive days. Follow on. Now, see, the rule that we apply for TA allow us to assume you're in the country even though you're not in. Okay, but then this rule only allow us to apply for anything within 2 years. So that's why if you have temporary absence that overlap 2 years, there's no problem. But if you have a temporary absence that overlap 3 years, then there is a problem, because the rule does not allow that. So if the rule does not allow that, then you cannot assume that you're in the country. See, what we are saying is something like this. Now, what if I have a situation that my period of stay is like this? I'm in the country here, I'm in the country here. Now let's say I stay for 70 days and 65 days. And I'm telling you that throughout the whole period, from 2010 all the way to 2012, these are because of, let's say, temporary absence. Okay, so one of the reasons. Okay, so temporary absence. Now, so when you have a temporary absence, you notice this time the temporary absence is very, very long. so long that it's from 2010, cover 2011 and 2012. Now 10, 11, 12, you see there are 3 different years involved in the temporary absence. So in this case, this temporary absence is not permitted anymore. Understand now? It's not permitted. It is a temporary absence, but it's not permitted. Okay? Now if it's not permitted, then you cannot assume that you're in the country. Then you cannot say that, oh, my 2010 I borrow from 2011 and the whole year in 2011 I'm in. No, you're not in, because this time the TA is not permitted. So if you ask me, can I use 7.1b? The answer is no, no, no. Okay? Now, so what would fall as temporary absent? What kind of reasons given as temporary absent? How many are there? Got how many? 1, 2, 3, 4, 5? Got 3, right? Now, what are the 3 reasons that we take it as temporary absent? Now, just take a look at page 5. Okay. Okay, so what falls as temporary absent? Now, again, see, the law tells us that temporary absence can be because you're leaving the country because of service matter. Okay, so it must be connected with service in Malaysia, owing to service matter that you leave the country, or you need to attend conference, seminars, or study abroad. So that's number 1. Okay, number 2, owing to ill health. That means any issues concerning health that you go overseas for hospital treatment that may take into account yourself or your immediate family. The immediate family refers to your spouse, your children, your parents. Okay? Now then it can also be because of social visit, where they only allow up to maximum 14 days. And social visit includes a vacation. Okay? Social visit includes vacation. Alright? Now, so that will be the 3 reasons that we allow that as a temporary absence. So this is what we permit. Okay? Now anything else, of course, we won't take that as temporary absence. Now, so this is 7.1b. Okay, what is 7.1c? Now if you fail B as well, then you can try and use 1c to make yourself a resident. Now how do you use 1c to make yourself a resident? There are 2 conditions that we need. So what's the first condition? You must have at least 90 days. Okay? You must be in Malaysia at least 90 days for that year in question. So the year that you want to determine your resident status, you must be at least 90 days in the country. And then what do you see? For 3 out of 4 years of assessment, immediately preceding that year of assessment, you'll be either a resident or in Malaysia for at least 90 days. Okay? So that's the 2 things that you must check. So the first thing you check is you must have 90 days for that year. Then only you look for the 3 out of 4. 3 out of 4 means you look at the last 4 years. So in the last 4 years, any of the 3, you can either have resident or 90 days. Either one also can. Okay? So you just need any of the 3, then you become resident. So that's why when you want to look at 7.1c, you normally need to check the last 4 years. But before you check the last 4 years, please don't forget you must check that year in question. You must have 90 days. So if I tell you in 2013, let's say you're in the country, for example, for only 12 days. But then you can't use 71C because you need to have minimum 90. Hold on, okay? Now let's say I change it. I have 112 days. Okay, so my first condition fulfilled. Now once first condition fulfilled, they look for the 3 out of 4. So how do you look for 3 out of 4? Look at the last 4 years. Look for the resident status. Now if let's say the last 4 years that we see here, we have resident, resident, non-resident, resident. Now will you be resident in this case? Yes. Okay, so in this case you have 3 out of 4. Now, but of course, you may not just look at the resident status because you may not have all the 3-year resident. Now, let's say, for example, I'm having 2-year resident, 2-year non-resident. Now, if 2-year resident and 2-year non-resident, then will you be resident now? Then you must check. Do you have 90 days or not? So that's why if you don't have all the 3 become R, you can check the days. Now, let's say I'm telling you the days that you're in the country. Okay, so this one I'm saying here you have 50 days. This one we have 100 days, 24 days, 210 days. Okay, so I'm now giving you the number of days that you're in the country as well as your resident status. Now, do you have 3 out of 4 here? Yes. You already have 2 years that you are resident. Now, once you become resident, do I need to check the days? Don't need. That's why the days are not important already, okay? So once you become resident, enough already. Now, only for these 2 YAs that you are not resident, you check the days. And you notice that the days are 100, right? We need at least 90. So you also fulfill this. Now, then this become resident by virtue of 1C. Okay? Now, so that's the third rule. Now, the last rule we see is 7.1. D. So what is 7.1D? Now 7.1D is the deemed resident status that we don't actually need to count the number of days. Now let's say I want to determine whether I'm a resident for 2012. Okay? Now I'm only in the country for, let's say, for example, 10 days. Now with only 10 days, okay, let's say my A, B, and C also fail. I can't use C as well because C I need at least 90 days. But I realized that the 3 YA immediately preceding 2012, I'm a resident. Then you just need to wait for the following YA to be a resident. So as long as you have 3 years become resident, 1 year become resident as well, then 2012 you will be resident by virtue of 1D. So normally I just say 3R plus 1R. Okay, so you just need to have 3 years of assessment preceding you and the following year of assessment that you become resident. Now the number of days are not important, right? That's why in this case, even you say you have 0 days or you have 50 days, there's no issue. But at least we know that the maximum you can have is 89. Because once you hit 90 days, it becomes 7.1C. So that's why you won't be using 1D. So that's why we know that anything from 0 to 89 days will be what we need for 7.1D. Okay? Now, so these are the 4 main rules that you got to know. Okay, we're going to take a look at an example over here. Okay, we see the handout, page 329. Okay, let's look at this handout. Alright, now it says that Adrian first arrived in Malaysia on 16 March 2006 to take up an employment in Malaysia, and the stay statistics were given as follows. Now they tell us from 06 to 2013 the number of days that he's in the country. Now they also mentioned that the absence from 20th of August 07 to 3rd of March 08 is for purpose of service matter. Okay, so this is 7 to 8. Absence from 31st December 2010 to 4th of January 2012 is to attend a long course required by the employer. So your employer asks you to go for a study, okay, which is also part of temporary absence, right? Okay, service matter, study, conference, seminar, these are all part of temporary absence. Now this is 10 to 12, 10 all the way to 12. And then they tell us again, the absence from 18 June to 20th August is for service matters in England, while from 21st August to 15th September is for an overseas vacation in Paris, before flying back to England for service matters again until end of the year. Now that means in 2012, right from the 18th of June onwards, okay, Adrian flew out from Malaysia for service matter. But instead of staying the whole period for service matter, he stayed until one period, then he went for a vacation in Paris, and then he went back to England for service matter, and then come back again. Okay? Now, so that's the stay statistics. Now, all these are given to you because you need to decide whether it will be relevant for 7.1b when you work out the temporary absence. Okay? Now, I just need you all to work out Adrian resident status. So what we're going to do is a very simple working. Now we put in all the year of assessment and put in all the 4 section A, B, C, D. And then work out the status. Now, so for 2006, now we see that Adrian is in the country for how many days? 165 plus 113, right? So it's 278. So will you be a resident? Yes or no? Yes. Which one? A. So just put a tick here to show that you fulfill A, you become resident. Okay? Now you're going to go on and determine for me 7, 8, 9, 10, 11, 12, 13. Okay? Now do it for me. In 2 minutes, solve as many years as you can. Okay? Right. Let's move on. Alright, now for 2007, Adrian is in the country for 104 days. So not enough using A. How about 71B? Now if you want 71B, then you need to see if there's any link or not. Got any link or not? Which year that you can borrow from? Now we see that 07 is hanging in the middle of the year. Alright? So you can only borrow from 2008. Agree? Because they mentioned that from August until March, it's because of service matter. Service matter is temporary absent. Okay? Good. That means you are connected. Now even if you are connected, you must count. You have 182, right? Now which one that you must have 182? 2008 must have 182. You borrow from 2008. The one you borrow must have 182. So in that case, you check and see, do you have 182 or not? Now very simple one. You must count from beginning of the year, right? So you count beginning until the end of the physical date, which is until 19th of May. You check like that. Okay? Very simple one. You just count until 19th of May. How many months do you have? 4 months plus only, right? Okay, I give you 5 months. 5 times 30. 150 only, right? Do you have 182? You won't have. Okay? So you fail B as well. And obviously you fail B here, you definitely fail C and D, right? Because 2007 is only the second year. C, D will need at least last few years, right? So non-resident. Alright, now 2008. Again, Adrian is in the country for 77 days. So not enough for 1A. Now how about 1B? Same thing. Now I need to borrow. 2008 borrow from which year? 2007, right? Now to borrow from 2007, you must check 182 from where? From 8th of May until end of the year, correct or not? Now 8th of May until end of the year got how many months? 1 year got 12 months. Up to April got 4. 12 minus 4 at least got 8 months. So at least here got 7 plus, right? 7 times 30 is 200 over day. So do you have 182? Yes, definitely. So that's why you don't actually need to calculate the number of days. You look at the period, you more or less can guess it. Okay? Now yes, you have 182. So you're resident. Alright, now 2009, you're in the country for just 96 days. So you can't use A. Can I use B? Can borrow or not? Now I don't see any reason given why I'm not in the country between 8 to 9, 9 to 10. So I don't have a temporary absence. Right? So in that case, I can't use B. So B cannot. Can I use 71C? Can I cannot? Okay. 为什么? OK， 可以，可以吗？不可以，为什么？没有4年，一定要4年吗？我加多1年给你啊。You want 4 years? I add 1 more year for you. So I add 2005. Okay, I add for you 2005. You are non-resident, 0 day. 有了？啊 ，OK， 这样可以了。哦。这么爽啊！看可以不可以？看可以。So 2005, you're not in the country, so 0 day and you're a non-resident. Now, do you really need 4 years? You don't need. We only need to check 3 year, any 3 year, but they give you 4 year so that you have more chances. So in this case, you look at the 3 year lah. Since you have 3 years, you just look at the 3 year. Now, number 1, 2009. Do you have 90 days? Yes, you have 90 days. So you look at 3 out of 4. Now 3 out of 4 shows that 08 I'm resident, 06 I'm resident, so I got 2-year resident. Okay, I have 2 more year non-resident. One is 07, one is 05. You want? Okay, I tell you. 05 also you are non-resident. Okay, now if you're a non-resident, you check the days. Okay, 05 you are non-resident, you got 0 day. So can or not? Cannot use 05, right? Okay, 05 cannot. That 07 you are non-resident, you got how many days? 104, right? You got 90 or not? Got. So got 3 out of 4? Got. So yes. Okay, so 3 out of 4 does not mean you want a 4 year, then you can. Okay. You want a 4 year, you add yourself. Okay. Now, so that's 2009. 2010, 364 day. Very obvious. What is this? 718. Yes. Resident 718. Okay, 2011, you're not in the country at all. 0 day. So A cannot, B cannot, C cannot. Any hope for D? 3 plus 1, right? D have 3? Okay, so far got 8, 9, 10 also R, right? So I need to see 2012. So if 2012 also I'm a resident, then I become a resident. Okay, so right now we wait for a while. So look at 2012 first. 165 days is not enough using 1A. Okay, how about 1B? Okay, if I want to use 1B, I need to have link. Can I borrow from 2011? Impossible, right? Because 2011, the whole year you are not in. So totally cannot borrow. So can I borrow from 2013? Okay, then you must see why you're not in the country. Now they tell us you're not in the country because you're absent June to August service matter. Okay, service matter can. Okay, service matter can. And then after that you go for a vacation. Vacation can or not? Vacation is social visit, right? Vacation is social visit, which actually is permitted, but got limit, right? How many days? 14 days. Now you check and see 21st August you left the country until 15 September. Will this be more than 14 already? It's very obvious. 15 September is 15 days. So you add on with the August, it's more than 14 days. So that means you already have a social visit that's more than 14. Now anything more than 14 is not permitted. That means you don't have a consecutive day that stick together. There's a gap already. So in that case, you can't use temporary absent for 2012. So in this case, B also out. How about 1C? Can I use 1C? Can, right? I have 90 days, right? Okay, if you have 90 days, then please check 3 out of 4. Okay, now when I check 3 out of 4, I realize that 2011, I don't know my status. 2010, I know I'm R. 29 R. 28 R. So still, by just looking at this, I already have 3 of the year becoming resident, right? So I'm a resident by virtue of 1C. And obviously, when you have this 12 becoming resident, then it will help you to be a resident for 2011. Okay? Right, for the last year right now, 2013, 181 days. Can I use A? Can? Cannot. You need 182. Can I use 71B then? Now again, the 71B, if you see, there is this so-called vacation. Now the vacation is more than 14 days. So the most you can take is only 14. But this 14 days is somewhere around September, right? That means even if you count, you can only take December, November, October, and a bit of September. Because after that, the end of the 14 days, you have a gap. So it's only 3 months plus. So again, you can't use B for 2013. Now I want to use C. Do I have 90 days? Yes. Do I have 3 out of 4? Yes. It's very obvious. In fact, all the last 4 years you're resident. So you become resident by virtue of 1C. Alright? Now this is how you determine the status. Okay? So just make sure that you remember, especially this coming exam probably is very important. Okay? So resident has not been tested quite some time. Okay? So I believe it's a quite good chance examiner may want to ask you. Follow? Alright. Now to determine resident status for individual, we look at the number of days. How do you determine resident status for company then? Now, the resident status for company is based on section 8 of the Act. Okay? Follow what? What's the keyword? Look at management and control being exercised in Malaysia. Okay? So you need to see that the management and control of the company is being exercised in Malaysia. Now what is management and control? See, this word is not defined in the Act. That's why if it's not defined in the Act, we look at the case law. Okay? Sorry, case study. Look at the case law. Now, so when you look at a case law, we try to ask ourselves that in a company, when and how will a company be managed and controlled? Who will have the power? So then we will realize that the most powerful person with the power of managing and controlling will be the director. So that's why from case law we understand the management and control is similar to the place of the board of directors meeting. Okay? The place of the board of directors meeting. Because when board of directors meet, they make decisions. And when the decisions that they make, they are managing and controlling the business. Can you see that? Now, so we look at it as board of directors meeting. But you see, these are old cases. Last time we got technology, right? So last time you want to talk about what FaceTime or video conference is something very, very hard you come across. Okay, so it's something that's not common. So that's why we don't see these type of cases very common. Okay, but nowadays technology is so advanced, things are so well connected. You do not need to physically come in. You can still have a meeting. So that's why nowadays we recognize the fact that you may not need to organize a meeting with all the directors come together. So that's why when it comes to issue of local director, okay, if you have local director. Now what happened now is, let's say we have A Sendirian Berhad. Now A Sendirian Berhad has 2 directors in Malaysia. And let's say A Sendirian Berhad has 3 directors from Hong Kong. Now when they do a board of directors meeting, of course they will have a board of directors meeting in Malaysia at the same time with the 3 directors in Hong Kong. And they do what? They video conference. Okay? They video conference. Now in this case, do you still call that the board of directors meeting is in Malaysia? Now of course it is. The board of directors meeting is in Malaysia. But in this case, can you still say that the management and control is exercised in Malaysia? Now it's a bit different now. Because even though the 2 directors are in the country, because you're having 3 directors in Hong Kong, you realize that the majority of the power to make decision has been reserved at Hong Kong. So in this case, you cannot say that the management and control is in Malaysia. Yes, you know? So like this, there is no MNC in Malaysia. Then in that case, you don't call it as a resident company. Follow? Okay? Now that's the rule on how you determine the resident status for company. Alright? Now, so company being resident and non-resident, is there any difference in terms of the tax treatment? Now actually there are quite a few differences, but just that some of these differences are not so relevant to you, because a lot of things you don't learn in F6 that you're going to see them, okay? But if I'm going to use the one that relevant to us, probably you can look at it as tax rate, okay? Now if you have a resident company and a non-resident company, in terms of the tax rate, a non-resident company will be flat 25%. Alright? Okay, a non-resident company is flat 25%. Now, a resident company, on the other hand, they depends on the size of the company. Okay? Now, then you must look at the size of a company. Small or not small. Okay? Small or not small. Now how do you know whether a company is small or not small? You look at what? The capital, right? Okay? Now capital is not so correct. Give me the exact wording. What capital? What capital? What capital? Ordinary share capital. Okay, some more. That's all I need. Ordinary share only. What else? Paid up. You must be paid up. Got different, right? Okay? Authorized paid up is not the same. Paid up, ordinary share capital. Some more? How much? How much? What's the limit? Not exceeding how much? 2.5 million. Okay? One more. The 2.5 million, when you check, when do you check? At the beginning of the basis period for a year of assessment. So if you only say capital, that means you get 0. But because the word capital totally don't have an answer at all, okay? We are looking at the beginning of the basis period for a year of assessment. The paid up ordinary share capital of the company must not exceed 2.5 million ringgit. Follow? Now, once you have that, then you become a small company. But of course, I've told you in the class before that we don't just look at the capital. We also look at the group structure. You must look at your holding company, look at your subsidy and stuff like that. Now, but I'm not going into that now. Okay, so I'm just telling you the basic, most important one is look at the capital. So if you're a small capital, what happened to your tax rate? For chargeable income up to how much? 500,000, you pay tax at 20. And anything above that, you pay tax at 25%. But if you are not small, then you pay tax at flat 25. Same like the non-resident. Okay? Alright, now so far we cover up issues on resident status. Okay. Now I'm going to move on to the second issue, to go through with you the format for tax computation. Alright? Now you see, when we do the tax, you have to follow the format according to the law. Okay? Now Now, what is the format that you need to follow? Now, you must remember, Section 5 tells us that for each source of income under each type of Section 4. Okay? Now, you know Section 4 got many types, right? Got 4A, 4B, 4C and stuff like that. Okay? Now, for every types of income and each source of it. So, for example, you can have two businesses. Business 1, business 2. Now, there will be two different sources. Now, employment also, you can have two jobs. Okay? You work full-time with this company, you work part-time with another company. So, having job 1 and job 2. There's different sources. Okay? Now, so these are how we look at sources. So for every source of your income, you have to work out a few things. 1, the basis. 2, the gross. 3, adjusted. And 4, statutory. Correct enough? Now, from gross to adjusted, what you have is deduction, right? That's why if you expand and see, from your gross income to adjusted income, what you have is tax deduction. So what do you mean by tax deduction? So I'm referring to those expenses that is allowed by the law. Expenses allowed by the law. So the law allowed, you can claim. If not, you can't claim. Okay? So you must have those expenses come in. And then after adjusted income, what you normally see is allowances. Correct or not? For example, you have capital allowance. Then you minus. Okay, then you get statutory income. Now, but capital allowance is very simple. CA is only given for what? Business income. Correct enough? We only give CA for business income. It's only given for 4A business income. So in the event you have any income that they are non-business in nature, for example, like employment, you got no CA, dividend, interest, got no CA, rental, got no CA. So when you look at those income that you find if allowance is not given, then actually by the time you reach to adjusted, you already get the statutory. Correct enough? Now then from the statutory income, what do? We arrange them according to a format, right? Okay, now you must take all the business statutory income arranged together. So that's why if let's say you have business statutory income, let's say you have business number 2, the statutory income. Now you have to arrange all the business 1 together first. Why? Because this is where you make use of what? The unabsorbed business loss. So that's why we group all the business income together so that we call it as an aggregate business statutory income. Now from this, you minus any unabsorbed business loss brought forward. So what do you mean by unabsorbed business loss brought forward? Now business loss occur if you get an adjusted loss. But the adjusted loss that you have in that year is called current year. If the current year cannot finish, the extra is called unabsorbed. Then you bring to next year. So that's why this must be the loss from last year. Okay. Now after you have the business, then all the non-business you bring in. Now the non-business will be what? For example, I have my employment statutory income. I have my rental statutory income. Okay, now all the statutory income, if you add them, you call them as aggregate, correct or not? Now what do you do after aggregate? See, there are two things that we minus, right? First is donation. First one, current year business loss. Then you minus approved donation. Then you get total income. Now from total income, if this is a resident individual, you will give them personal relief. Then you get chargeable income. Okay, and of course with the chargeable income, you're going to calculate the tax. Now overall, that's the format. Okay, so you have to remember the arrangement. See, in the exam, there are just so many students that they always mix up the arrangement. They write the wrong word. The aggregate go and write on top under adjusted. Okay, so not the total put under aggregate, then the aggregate put as total. So this is not right. Okay, so you must remember the format so that you don't lose those kind of easy mark. Okay. Now, so I'm going to show one example here with numbers, just to see how we make arrangement over here. Now look at the next illustration with Kasim. Okay, over here, Kasim. Alright, now it's a very short example by saying that work out what's the tax liability for Kasim for year of assessment 2013. Alright, Kasim is a resident individual, has provided you with the following information. Okay, they've given you the employment statutory income, the rental statutory income, dividend income, business 1 adjusted income, business 2 adjusted loss, capital allowance for business 1 and business 2, balancing allowance for business 1, balancing charge for business 2, unabsorbed business loss brought forward from business 2, cash donation to an approved orphanage, buy a wheelchair for Kasim himself because he is disabled, zakat payment, deferred annuity premium, life insurance, EPF, contribution to private retirement scheme. Now some of these you must know because you learned tax before, it's about relief. Okay. Now so what we're going to do here is to pick up all the figure and arrange them nicely so that we can come up with the proper format to show how much is the CI and work out how much tax that Kasim needs to pay. Okay. Now we begin off with business. Okay, section 4A business. How many businesses that Kasim has? 2. Business 1 and business 2. Now you follow the format that we say. See, they already given us the adjusted income. So adjusted income for business 1 is 55,000. So after adjusted income, what do we bring in? Now the business has a balancing allowance. So allowance, what do you mean by balancing allowance? Is like a loss on disposal, correct or not? Capital allowance is like depreciation. So balancing allowance is like a loss on disposal. So the balancing allowance is 4,000. Now besides the balancing allowance, they also give us the capital allowance, which is 12,000. So the capital allowance, $12,000. Now that's it. So in total, the allowance available that we absorb will be 16. Now that will bring us to statutory income, 39. Okay, now you're going to go on and show the figure for business number 2. Okay, fill in the blanks. Not sure, then just use a pencil, at least you got something you know. Alright, okay, just do as much as you can. I'll give you 2 minutes. Okay, so now business 2 says it's loss making. So I'm going to show 0 adjusted income. Now in bracket or at the side, I'll put down the loss as 7,000. Now the business is loss making, but then still we have a balancing charge. Now allowance is what you deduct, charge is what you tax. Okay, a charge is what you have to pay, right? So there's a balancing charge. The charge is 13,000. Then the capital allowance for business 2 is 10,000. Now actually we have a net charge of 3,000. Now if you have a net allowance, then you can't deduct because there's no income, then you carry forward. But in this case, it's a net charge of 3,000. So you just add it on to the 0. So you have a statutory income of 3,000 then. Now see, this is the statutory income of business 1 and 2. So take all the statutory income and you combine them. You call this as the aggregate business statutory income, 42,000. Now why do you need this figure that we say just now, right? Is to claim unabsorbed business loss. So the unabsorbed business loss is 9,000. Unabsorbed business loss brought forward, 9,000. We're left with 33. Alright? Okay, now business all done, so you now need to bring the rest of the income, the investment source. Now we have employment in this case, so my section 4B, employment statutory income, wrong side, 4B, employment statutory income. Okay, now then we have 4C, dividend. Now dividend in F6 is really simple, right? All dividend in your exam is tax exempt. You don't pay tax on the dividend, so you just need to show a nil in the answer, okay, that you don't tax the figure. Then we have 4D, rental. So the statutory income is 24. Now that's it, no other income. Now by the time you have all the income, you add all of them together and you call it as aggregate, which is 117. So what do you do here? You minus two things, right? Just now we say from aggregate you minus current year business loss. That's the first thing you got to minus. Now the current year business loss is 7,000. Okay, then you minus approved donation. Okay, now you have to follow this sequence because donation is not absorbed, is permanent loss. Okay, so you cannot carry forward. So that's why you have to minus this sequence because it's a treatment. Okay. Now, if it's approved donation to institution, like in this case, orphanage, then the rule tells us that maximum deduction you can take is 7% of your aggregate. Now, we'll see the rule later, okay? So just check and see. 7% of 117 is 8190. Now, the amount is only 2,000. So just go ahead, claim this. Right, we come to total income 108,000. Now from the total income, what you do is you're going to claim relief, right? Okay, so the various relief available here. Now individual will be given a personal deduction of 9,000, correct enough? Okay, if a person is disabled, then you get extra 6,000. Now they mentioned that Kasim bought a wheelchair. Wheelchair is a form of supporting equipment, correct enough? Okay, wheelchair is a form of supporting equipment. Maximum you get 4,000. In this case, the maximum you get 5,000. In this case, it's 4,000. Now, zakat is a form of rebate, right? So we will not show it here. Okay, deferred annuity is a relief together with private retirement scheme. How much do you claim in total? Maximum 3,000. And then life insurance you claim together with EPF. Again, maximum you get 6,000. Okay, now that's all on the relief available for Kasim. So this is the chargeable income. Amount is 80,000. Okay. Now in the exam, you will be given a list of relief. That's all in the exam question paper. Okay. So I will not go through individually what's the relief. So you all must revise. Revise. Later I only cover those that with changes. Now in the exam question, you will be given a list of relief with the maximum limit. But of course, they will not tell you the rule. So you must go and remember the rule. Okay. Now, so how much tax the Kasim needs to pay? Now we need to calculate the tax for 80,000. Tax rate in my note is in page 25. Okay. Now Kasim is a resident individual. So if you follow the tax rate right now, the amount is 80,000. So what do? You look for the bracket, right? That is closest but lower than 80, which is 70. That means for 70,000, your tax is how much? 6650. Then what happened to the rest? The rest is from the next level. You pay tax at 24%. So this is what happened to Kasim. On the first 70,000, he pays 6650, and the balance 10,000 is paid at 24%, so 2,004. So his tax will be 9050. That's the tax payable. But then you know that Kasim, they mentioned to you, he get what? Rebate for zakat. So there's a rebate for the zakat payment, which comes to 600 ringgit. So that's the net tax payable. Okay. Now this short example is to serve as a revision on the format for tax computation. Alright. Now I would like to move and refer to donation rule. Okay. Now, see, we said to you that we give you a deduction for donation after your aggregate, after the loss. That's a donation. Now, but what falls into approved donation that you can claim? Now, that's where you must look at the law under section 44. There's a lot of them, okay? So I'll bring you to the law again. Donation, page 21. Okay, so this is in page 21. Now, see, the most common donation that we have is 44.6. 44.6 is those that you make a cash donation. Now, to who? It can be donating to the government, state government authority, or approved institution. Now, approved institution refers to charities and stuff like that. Okay, so the difference between donating to institution and to government and so on is government, all this got no limit. You can claim as much as you donate, but institution, there's a limit. So that's why just now when we see the claim of donation to orphanage, we show a 7%. So limit will be 10% for who? Company. And then limit is 7% for anyone other than company. That means individual is 7. Now it's percentage of aggregate. Okay. Now besides this cash donation, you can donate any form of antique, artifact, manuscript, painting. All these are antique, okay? Donating to government, you can claim. Now you can donate cash to library, which must be school library or institution library, but you only allowed to claim up to maximum 20,000. Okay? Now we can also donate money or in kind. That means anything also can, right? for providing facilities in the public that benefit disabled person. But this one is only for individual. So if company do the donation, they got nothing to claim. Okay, see not? Now besides this, then we also have donating medical equipment or cash to approve healthcare. That means hospitals. That again, there's a limit 20,000, which also apply only to individual. Now you may also donate painting to art gallery. Now we can also donate zakat, but this zakat, the donation is only for company. Individual, just now you see it, you're going to claim rebate. Now company will claim deduction by donation. Now there's a limit 2.5% of the aggregate. Now then there's two more. One is for sports. The other one is project of national interest. Now these two you will need to see how to work out the figure. There's a working. Okay. Now I'll work out straight away together using an example to show you how to derive the figure. Okay. Now so all that are the donation rules that we have. So you have to remember all of them. Now we're going to start with one example here in 330. Okay, look at case 1. Now, it says that Cik Salina has an aggregate income of 200,000 for year of assessment 2013 and has given you the additional details. Cash donation to state government 5,000, cash donation to approved healthcare 12,000, current year business loss 26,000, medical equipment donated to an approved healthcare 11,000, cash donation to an approved orphanage 6,000, and ang pao to the orphan 700, zakat 400, sports equipment donated to approved sports event 8,000. Salina has no other tax relief except a personal deduction relief for life insurance amounting to 8,000 ringgit. Now how much will her income be and how much will her tax liability be? Now, so for case 1. See, mainly what we see here are about donation. Now they tell us the aggregate income is 200,000. Remember, you got to show the current year business loss first. Okay, and then now you claim the donation. Alright, now we have cash donation to the state government. Now this one, there's no limit. So you can claim as much as you can. So here, Salina donated 5,000. Okay, we also see that Salina donated cash to an approved healthcare. Now, you can get 12,000. But at the same time, I also show the medical equipment to approve healthcare. Now, the medical equipment has a cost of 11, but then you will restrict to 8. Why? Yes, maximum 20. Now then we have a cash donation to an approved orphanage. Now the orphanage is the institution. Maximum we give you 7% of 200, which is 14,000. In this case is 6. Now the ang pao is not the orphanage. The ang pao are all the orphan inside. You don't donate to the orphanage, so you don't claim. It's not approved already. Can you see or not? Ang paos are not donated to the institution. So it's not approved. So it makes a lot of difference. Okay. Now zakat you're gonna claim as a rebate. Then you donated sports equipment, right? Now, sports and project of national interest. See, I've said to you there's a formula you must follow. Now, I'm going to show the formula here. Now, you're going to use the same limit, 7% of aggregate income. And you minus whatever donation to approved institution. Okay? You minus whatever donation to approved institution. So the 7% that you restricted this out is 6,000 that one. You minus that one. So 14 minus 6 is 8. Okay, compare with the actual donation which is 8. Yeah, coincidentally it's the same. So you take the lower. Very bad example, okay? I didn't calculate, I simply throw the figure. Now, so you get 8,000 also. Either way also 8, okay? Now that's your sports equipment. Right, that's how you calculate all the donation. So 135 is my total income. Now they tell us you just claim the normal relief, personal deduction 9,000, and there's a relief for life insurance, maximum 6,000. So 120. That's my chargeable income. Okay, how much tax that I'm paying? So if I follow my tax rate again just now, page 25, okay? On the first 100,000, your tax is 13,850. Excess of that, you pay tax at 26%. So that's 5,002. So TP is 1950. Now you get a rebate for the zakat that you pay, which is 400 ringgit. So the net tax payable. Alright? That's the case for Salina. Okay, so this example show a few of the donation rules. Now I would like you all to work out for me. So the second example is even shorter. We just tell you BBX has an aggregate income of 700,000, and then they've given you the following details: the cash donation to approved charity, cash contribution to project of national interest 8,000, cost of equipment installed in public park for the benefits of disabled individual 25,000, zakat, and donating to public library. Now, how much tax that you need to pay, assuming BBX has paid up capital 2 million for its ordinary share? Okay, calculate this for me. Okay, is to test your understanding for donation rules. but this time we're giving you a company. Alright, see, the aggregate income is 700,000. Now cash donation to the approved charity, maximum 10% of 700. Now the donation is just 60, so no problem. Okay, the cash to project of national interest. Now you see, this one is the same as the sports. In fact, if you have two things, you just combine them and calculate at the same time. So we take 10% of 700, we minus 60, because this is the one that you have a limit. So you minus this one, the limit of the 10%. So we get 10K. And the donation is 8,000. So you claim the lower. So obviously 8,000 is lower, so you just claim 8,000. Now this equipment that you donated in the public park for disabled person, you can't claim, right? Because it's only meant for individual. Now zakat to company you claim as donation. Maximum is 2.5% of 700. So the amount donated is 20,000. So 2.5% of 700 is 17,500. So you only claim up to 17,500. And then donating to public library, maximum is 20. Now, so all in, my total chargeable income is 594,500. Okay, so how much tax that BBX has to pay? Now this is a small company, right? So on 500,000, you pay 20%. So it's 100K. Then the balance 94,500, you pay 25%. So that's 23,625. So 123,625. Okay. All right. So that will covers on the rule on donation. So remember, okay, you must go and read back on the session 44 and see what are the rules. Memorize them. All right. Okay. So I give you a short break. Okay. Come back, then we'll look at relief.